Hello everyone, so as you can see this is a new channel. It's called Phil's Trades. I'm an ICT trader. I've been doing it for just under a year now and wanted to sort of expand, not just trading. I want to do some YouTube videos as well, help other people that are starting off their journey. I don't claim to know any of the concepts that I use have been taught by ICT. There are obviously some that I've sort of found and made myself, but not many. It's mainly based off the stuff that I've learned from him. Wanted to make a new channel just to sort of help me with my trading as well, keep me more disciplined. I'll be making videos, so I'll be doing basically more coverage on the market myself. So we're going to start off with just this video. We're going to be doing a market review of the 25th of December, 25th of November, sorry. This video is just to get the ball rolling. There'll be nothing particularly exciting about this video. I just wanted to make it to test everything out, make sure it's all right, just get a video uploaded. So we'll jump straight into it. So starting off with the daily profile, this is the new day. I'm filming this after the next day's open, which is Tuesday. So this is the candle you want to focus on the daily chart. Obviously the election brought price up a lot, taking out all-time highs, which are there. Sort of turtle souped them, dropped back down, respecting this fair value gap, this big one, tapped into this inverse, never reached this one, which I didn't expect because it's sort of like a breakaway gap. And then throughout last week, price, we saw these big wicking moves, so there was no real displacement last week within this fair value gap, which to me suggested that we were going to carry on pushing up. I was expecting Monday manipulation down. We'll go more into that in a minute, but yeah, this was the fair value. This, when it comes on, so my interest for the day with this fair value gap, as I'd expect to see this one get disrespected because you spent such a long time in it. If we were really bearish, we would have dropped on this day and carried on going lower. So anyway, try not to talk too much because I can waffle on, and I noticed that I just did another practice video and I was speaking for half an hour, so I'm going to try and keep this one to 10 minutes. So I've got to keep pushing on my points basically. 4 hour again, this was the candle I had my eyes on, and look how it's respected. The body's respecting perfectly. Just drag it down just to make it easier, we know what we're talking about. Again, this one I could see getting disrespected. I normally tend to see that if it disrespects the first one, and it does, it is going to come back down. It's always going to trade to the highest one that there is. So that's the one I had in mind. As you can see, we've got this new week opening gap which stayed open. Wicks didn't fill any of this range, so that was a really strong drawing liquidity for me. That's where I basically targeted my trades going into today because it stayed open as well. Also Monday manipulation for a bullish week, which I think will happen this week. As you can see, London took out Asia's highs and lows, but no real displacement, stayed in the range. We saw 830 rally up. I didn't think it was going to go this far. We put in an SMT with ES, which I won't get just because it takes, actually, I've got it there. So you could have had this, could have traded this up if you, I didn't think it was going to go up like it did, especially with this gap, like I said. But yeah, we'll go 5 minute. I'm just going to go full Nasdaq, this chart. 830 we see rally up, took out sort of short term lows, nothing important really. Trade this 5 minute fair value gap, respected it, carried on up, inverse this one into market open, in which we saw, go to it, we saw this low taken out. So we've got this first market structure shift again. This is ICT's 2022 model, but it didn't work here. Main reason, I think, where it was already dropping down at 930, I'd expect this high to be taken now, just because in order for it to get down to this new week opening gap, I'd expect it to take some buy side first to stop out any traders going short. in this run, so he had no trades as of yet. I was expecting this high to be taken, not market structure, so that's buy side liquidity. So yeah, this big fair value gap, I expected to see that getting burst. Even if you were to take a trade, the risk reward wouldn't be that good, even if you were to use this one, although I believed, just because of, in terms of liquidity, sort of became a seek and destroy profile a bit, taking out lows and highs and then finally going to its move. So going into the macro, which I'll just mark out here, the annotations aren't very clean. It's just because I'm trying not to spend too much time recording this video, just so it doesn't bore everyone to death. But yeah, so the macro starts here at 950, and so the points I'd like to mark out, we've got this imbalance. We had a mini, not a proper consolidation, but price moved right from here. As you can see, it sort of formed a little bit of a range. We then broke lower, taking up this low and this low. So to me, that was a clear sign that we were probably bearish approaching macro after taking buy sides. We had this higher time frame S&T as well. ES took out, I think, a 4-hour swing high, whereas Nasdaq, as you know, stayed in that fair value gap. Again, simple, clean bearish movement. So I entered in, I believe, 951. Now I'll just pull up the entries here. References, show chart executions. We did take a couple of silly ones here, but we won't go into them because they're obviously bad trades. Now this is something I like to use on days like this, where we have these quick moves down, where if you were to enter with this fair value gap, you wouldn't have got in. I anticipated that this would stay open for a couple of reasons. So firstly, as I said, because we sort of went into a little bit of a range, this I'd consider as a breakaway gap. The algorithm, I believe, would start sprawling now after taking this high. So, and just because of how that was a liquidity void as well, it wasn't just a volume imbalance. Price hadn't traded at all through there, so I thought it served as a really big magnet. We've got this candle then comes. So as you know, ICT teaches that wicks can be used as balanced price range, because on a lower time frame to this, price has made one clear movement up, efficient movement. Buy side has been delivered efficiently, and sell side's also been delivered efficiently. So I'm not used to talking this much without making any mistakes. I need to get used to this. I will get better with time. But anyway, yeah. So once this broke down, I've got a setup. Well, not a setup, but an entry rule where you can use this, in really bearish or really bullish scenarios, where we get this balanced price range. As it's filled in, also it's filled in this 1 minute imbalance, which is about to form. It's filled in and then broken down. So that has not only delivered this price run efficiently, but it's also filled in any inefficiency that could have come here. So, and for it then to close bearish, I then enter when the next candle starts. So this candle closed bearish, I've entered here using my stop loss at the height of this wick. You could go really ballsy and use just above the 50%, but I'm not sort of advanced enough to do that. I wouldn't know when to do it, and for the sake of a few points, I don't really think it's that worth it. I try not to tighten my stop loss too much, just because there's been a lot of trades where it's taken my stop loss and then gone in the same direction. I'd rather make less money on a winning trade and win more trades than potentially lose one, because it can mess up your mentality. It's not just about that one loss. If I'd lost that trade, I could have gone on tilt, tried to trade more even though I shouldn't. But anyway, I need to stay focused, I need to stay on the point. I've got this low taken, so that was another market structure shift. We started to soup it, we sort of wicked down, traded up quickly, so I took off a partial. I was going to wait until we had these sort of relatively equal lows and this low taken out to take a partial, but as it started wicking, I just thought I'd take off my partial. I made quite a lot, as it was already at just over 2 to 1, so I was quite happy with that, taking a partial there. And then it wicked up, tapped into this imbalance. As soon as this happened, I moved my stop to entry, basically. Just move it for that sake. Moved it to here because I didn't think, due to how big the imbalance was, and I was still expecting bearish price, I thought price shouldn't fill in this imbalance just because how large it is, and it's in the macro, so I thought it would be a quick, efficient move, which it was. We then did take out these lows, which is where I took partials and ended up just closing the trade here, more because by the time I'd taken these off where I'd risk less because of these couple of losers, I basically there wasn't enough difference in money. It was a bit about 40 quid, so I thought it's just easiest to take it off here, save me hassle. And then after the macro we consolidated, which I expected. I tend to find that in the trading day there's one real move, unless it's a big news day like a non-farm payroll, then you might see, you know, not several, but 2 or 3 big sort of moves. So I thought this is the move. This was my draw on liquidity for the day. It's reached it. It's left 10-10 macro, and I don't trade from 10-10 to 10-50 just because I find it to be less high probability. I've taken quite a lot of trades in that time, and I tend to lose most of them because it normally comes where I haven't placed a trade and I'm then sort of more cat A to look for it. And I was, you know, this is a perfect example where price has made its move for the day and it's consolidated in the 10 o'clock hour. It then did break low. These were like £50 trades, which is silly, but yeah, we consolidated after no real, again, there's no trade for me to take here personally, although I did take these ones. I was anticipating it taking this high, but looking back on it, there's nothing here, you know, there's no real liquidity draws, there's nothing, you know, for these equal lows maybe. But yeah, so that was today. Going forward for the week, I personally think it's going to be a bullish week. Although this chart does look bearish, we've taken all-time highs, displaced low, just went into this fair value gap and rejected off it. I don't really know why. I'm not saying that I'm not open to it being bearish, but I just think personally we're going to take out one more high or even cause an SMT, but I reckon it's going to go up because if we switch to ES has gone much closer to them highs, as you can see here. It's inverse that fair value gap and it's come back down and tapped in, so this chart obviously looks a lot more bullish. So I reckon we can get these highs taken on ES, even if that's, you know, just tomorrow's trading, and then we shoot down for the rest of the week. I just think the buy side will be swept. As you can see, this chart is a lot more bullish. Yeah, so that's pretty much it for this video. I'm going to start live streaming probably next week. Not that anyone's watching this is more just a test video, just so when people come to the channel there's a few videos that they can watch, and just to make the channel not look like it's a brand new channel basically. So hopefully you did enjoy it. If anyone is watching this, I'll be linking my Instagram and all the other socials, so you can look on there, follow me on there. If you guys have any friends that are trading or looking to get into trading, make sure to send this channel because it's very beginner friendly. I'm going to be doing tutorials basically on the more beginner stuff, just because I can teach it well myself, and you know, I don't claim to be, you know, a really successful trader. I'm still, you know, just starting really myself. I just want to make a channel, hopefully get another sort of income stream going, and then build a community of traders so that, you know, there's people have a group where they can all talk, ask any questions that they need answering that they can't find the answers to with ICT. Again, obviously as well, all my concepts are from him. I've got a few things that I've sort of made up myself just by my experience through the markets, but it's mainly due down, you know, all what I know is basically him. So I don't claim to be, you know, the author of these concepts, but yeah, just made this channel just for a bit of fun, and it also keeps me on the ball, because if I've got a fan base, it gives me more reason to do the extra work looking at the charts. Even these overviews just helps me as well get another look at the chart, and I want to help other people, because I know how frustrating the start of your journey can be, and the amount of trades you lose, you blow accounts, and every time you have that sort of dreaded feeling where you think, oh, I'm never going to be able to do this. I want to help people get over that fear, because every trader has it, and sometimes you just need someone that's actually trading to say, someone you can talk to properly, to just say, look, I was in this position, and just as a bit of motivation to carry on going, because sometimes it is hard and you feel like you're just not meant to do it. Trading's all a scam, it's gambling, but sometimes you need someone just to help you pick up your confidence, because I believe trading's a lot more to do with mindset than what you know. Just because you can know as much as you want, but it's all about how you execute. There's lots of people can make money through this move, but it's when you enter, it's entering at the right time, patience, all the other things. But anyway, I'm not going to ramble on too long, because this video has gone 16 minutes already. But yeah, hopefully if any of you are watching, make sure to subscribe, try and support the channel, and yeah, I'll see you next time.